Welcome to Word on the Block, the series that takes a deeper dive into blockchain, crypto, and emerging technology that shapes this world at the intersection of business, politics, and economy. It's what we cover right here on Forkast News. I'm Editor-in-Chief Angie Lau, and it is my pleasure to introduce to you right now our next guest on the show. He's CEO of Diginex, Richard Byworth. Hong Kong-based Diginex is going global, Richard. You're expanding beyond the regulatory framework of the city. In fact, you're about to launch Equus.io. This is your institutional-grade crypto exchange operating under the regulatory framework in Singapore. So the question for you, Richard, is you're based in Hong Kong. Why Singapore?
Angie, great to be here. Thanks for having me on the show. We're in Singapore around the exchange because the exchange framework in Singapore is just that little bit more flexible in terms of what we're trying to do. So the big focus for Diginex and particularly Equus.io is really expanding the derivative marketplace and providing infrastructure to institutional investors to allow for really that propagation and growth of the derivatives markets more broadly. I mean, we do operate in Hong Kong in the majority of our businesses, in our asset management business, in our capital markets business. But at this point in time, Singapore is the right regulatory framework for us around the exchange.
All right. So, this is often what they call a regulatory race. Hong Kong SFC has created what is still a sandbox environment. Singapore certainly has expanded a lot of language for its regulatory framework for crypto, for blockchain projects, and for exchanges. And so when you say you go after the derivatives market for institutional grade investors, the flexibility that Singapore gives you, what exactly will those investors get? What can they expect that's a little bit different anywhere else?
Sure. I think, and actually I think a good example is the US. So the way that the CFTC have operated the framework for derivatives has really been around providing platforms that can only be accessed by broker-dealers. And I think the key thing here is that we're operating under a construct that allows both retail and institutions to operate on that platform. And I think that's really, really important when you're looking at key infrastructure like portfolio margining, as well as the perpetual and futures products that are driven by retail pricing, but then institutions coming in, providing the liquidity and making the market more efficient. So I think by being able to have the two together, it really adds a differentiation.
It's really notable how much institutional interest is getting into the space. We note that Bitcoin has hit above 10,000. It's showing a level of stability compared to the equity markets at the moment. And, what do you make of this increased interest, especially in really a global pandemic world where equity markets are so very volatile? What are you experiencing in terms of what the almost the hunger, for alternative assets or alternative investment vehicles that institutional investors are looking for?
It comes down to monetary policy. And I think monetary policy now is really starting to make people think, how am I hedging my portfolio against inflation? And I think one of obviously the key macro PMs in the world, Paul Tudor Jones, came out and stated that in this particular situation, he sees Bitcoin as being the fastest horse as his hedge for inflation. I think that we've got to a point with central banks where there's no reversing it. Obviously, Trump wants to get reelected. He's not about to let the Fed stop easing or printing money. And so when you look at Bitcoin as a scarce digital asset, that's something that's really starting to create awareness around investors looking to hedge their portfolio, both institutional and retail.
And another thought leader in the space, Tim Draper, and a guest on this show here at Forkast News, we spoke recently and he talked about his forecast for Bitcoin. And, we talked about this environment in which we're all living in under the weight of really, on one hand, what is a pandemic fueled almost depression or definitely recession. And then on the other hand, desperate stimulus. And then yet in the middle, in this kind of middle lane that we're talking about here with Bitcoin, he foresees by 2023, Bitcoin could reach, in his view, 250,000. You think we're going to get there?
Tim's very bullish, obviously. I think, the route to getting to a $250,000 price in Bitcoin means that you've seen a significant devaluation in the dollar price. And so I think, it can get there if the Fed were to continue down a road of real complete printing and loss of control, really, of the printing press. I think, the Fed is a group that is extremely thoughtful in the way that they go around this process. And I think they have a very good balance in the way that they're thinking about these things. But I think broadly, it's very possible. I mean, from my own perspective, I see an extremely, a lot higher price from where we are today, even in the next 6 months. So, Grayscale investment, one of the largest crypto hedge funds. I mean, it was incredible. They reached a $5 billion valuation this week after adding $500 million in assets under management in just a week alone. It just shows this kind of appetite is just increasing amongst institutional investors. And increasingly, we are seeing this and monitoring it at Forkast News as well. I mean, obviously, Equus.io is among the first, not amongst, the few. There increasingly are a lot more competitors in the exchange space, like AAX, like Binance, like all of these other exchanges that are also looking towards that specific grade of investor. How do you think the story has shifted, even as you were building out Equus.io? Just over the past year, it's just kind of this migration of institutional interest increasingly in this space. Yeah, I think probably the biggest change that we've seen over the last year has been the introduction of the futures product across broad exchanges. And that's really seen the growth of the derivative market scale from, very, very limited to where we are today. We're 2 to 3 times the spot market and number well into the billions of dollars for daily volume. I think to the point about Grayscale, if you look at Grayscale, it's a product that you can access. It's listed. It is Bitcoin exposure directly. The big part of what we're doing is trying to raise the credibility of the industry, to offer transparency, and on our roadmap in September is a listing on NASDAQ. The Diginex group goes to a NASDAQ listing via a SPAC, and we've got that coming up in 6 weeks' time. For us, it was very important. It's about bringing that credibility to the industry to allow that growth to really go to the next level and give institutions that assuredness that they need to onboard to a platform.
Essentially a reverse public listing, taking already a publicly listed company and injecting the Diginex DNA into it. As you go to market, what do you think the investor, both on the retail and institutional side, as they take a look at Diginex in your public listing, what are they going to be buying into?
Well, I think the big part is obviously the exchange. We're going to be the first virtual currency exchange listed on NASDAQ. And I think that's actually a huge proposition for investors that really struggled to get access in the equity markets to a play like this. So obviously Diginex is a hell of a lot more than just a virtual currency platform. We have a capital markets business. We have an asset management group. We have our trading technology platform, Diginex Access, and we have a full custodian offering in Digivault as well. So it's a really diversified play across the virtual currency space, and that people can, for the first time, as I said, get access to via the public markets.
Another competitor, also based in Hong Kong, BC Group, also publicly listed, at least in Hong Kong, recently raised 36 million in a recent share placement. Also reports that Fidelity invested some tens of millions, close to 20, into some shares at BC Group. And so these names and these investors, as they buy shares of even your competitors and as you go to market, does this also elevate just what the conversation has matured into, even just compared to a year ago?
Yeah, I think that's absolutely right. I mean, obviously Fidelity have been involved in this space for quite some time with Fidelity Digital Assets that they've built themselves, a custodian group. But I think this is really just the beginning of that credibility shift that I talked about before, where you're going to start to see more and more companies get the fact that for that level of transparency that you need, for people to trust a platform where there have been all sorts of security issues and credibility issues in this industry for so long, you're actually going to start to see much more of this. People realize that is the way or the route towards a much deeper credibility for the industry.
It's interesting that you're now operating under the regulatory framework in Singapore. Why not, if you're going to list publicly on a SPAC on NASDAQ, why not, under the US regulatory framework?
Yeah, look, I mean, it's like I said before, the CFTC is a little bit restrictive at this point in time in terms of who can access futures and derivatives. This is not something we need at this point in time. In terms of the way that we're trying to drive things forward, we really want to build a complete infrastructure offering around derivatives that gives that regulatory certainty to people as they start to explore this product set.
What's interesting is just the U.S. space is evolving so much. Hester Peirce, we spoke with her recently as well. She's talking about the Howey test and how that might need to evolve. We also heard about the U.S. Office of the Comptroller of Currency in recent news. This is really interesting, where traditional banks now can serve as crypto custodians. So the space is certainly evolving in the U.S. How do you hope to potentially influence, impact, and get involved in that regulatory conversation, especially after your NASDAQ entree?
Look, I think that is a very, very important point. That OCC point, it really highlights the issue in the industry, right? That all these banks now suddenly need to think, okay, what is going to be my solution around digital security custodianship? And when they look at the industry and they look at, companies that they're likely to be able to work with, it's actually very few. And so this is where I believe the Diginex proposition is extremely differentiated by being able to offer custody solution that is in the process of being regulated under the FCA in the UK for digital asset security. We're AMLD5 registered for the new AML and KYC regulations across Europe. There's very few companies that have achieved this level of regulatory compliance and credibility. And I think, we are already becoming, since that announcement, the focus of many banks that are starting to pay attention and look at what Fidelity are doing, look at what other players are doing and saying, we need to catch up fast.
Yeah. But the one thing that we still don't have is insurance. I mean, custodian is one thing. Insuring the asset is another. And while that in the traditional space, banks are, this is something that, even under FICA and all of these other things, that there's some aspect of insurance there. Why is that still missing in the custodian space here for cryptocurrencies?
Yeah, so I mean, in terms of the custody space for digital assets, there is insurance. Actually, you can get insurance, and we do have a line of insurance with our custody solution. There's two types of insurance around this space. There's crime insurance, which is a specific hack, and then there's specie insurance that can be much more expansive and covers cold custody solutions. Actually, the insurance industry has developed quite rapidly around this, and I'm approached regularly by different insurance brokers trying to push their product to us. So yeah, it's starting to grow, and we're already starting to see rates for insurance coverage drop quite significantly.
What's your hope for Equus.io?
So really the hope for Equus.io is to deliver an infrastructure that really allows people to operate in the derivative space to the sort of degree that we see in other industry or other financial products. So, you know, FX derivatives is hundreds of times the spot market in terms of daily volumes. In terms of crypto today, we're really just 2 to 3 times the spot market in crypto derivatives. So providing that infrastructure will really allow the industry to take the next level of growth that we expect to see. And so my goal is that in a year's time, we're sitting down here, Angie, and having a conversation about how we've seen 10 to 20 times growth of the derivative market that it currently is today.
You know, and cryptocurrency is one thing, but digital assets, I mean, that's a whole new world here. I mean, is there you know, that on ramp that, you know, it starts with crypto, but, you know, it can expand into so much more?
Yeah, look, I think, again, very pertinent question. The industry is traveling in that direction. You know, blockchain networks and blockchain solutions are going to drive the way that we issue securities in the future. There's no doubt about it. And obviously everyone is starting to explore security tokens. And actually that's a big focus of the banks and custodians that are talking to us about custody solutions. It's how do we deal with security tokens? You know, they're not always focused necessarily on cryptocurrencies, but they're thinking about security tokens. I think you're absolutely right. That next step comes with when you've got infrastructure in place, when you've got regulated exchanges like Equus.io that then have that digital security exchange licensing, and that feeding into the custodian as well to be able to cover digital securities. And then once you have that infrastructure in place and it's quite broad, then you'll start to see a much larger growth of issuance of securities leveraging blockchain networks.
You know, I got to ask you this question before we wrap up. You know, we are talking in a part of the world in Asia where things are happening pretty quickly. You know, just north of us is China and working on CBDC, or digital electronic currency payment, or DCEP. Let's see, digital currency electronic payment, which is essentially the central bank backed digital RMB. And so these initiatives are happening at such a fast pace. You're there in Hong Kong, we're talking about Singapore, we're talking about this region here. As you take a look in this space, where do you think the other blockchain and crypto hotspots are going to emerge?
Yeah, like I said, I think it's going to be in the security token space, or what we refer to as digital securities. We're starting to see regulators look to adapt their regulation around that. And so securities laws are going to change to accommodate security tokens or digital securities. We're really very excited about that because obviously all the infrastructure we've built caters to that product set too.
And so then what do you think of all the initiatives that's happening in China? Do you think that just stokes just more institutional interest?
Yeah, look, I think central bank digital currencies are definitely going to be a continuing theme for this year. I think COVID has really expedited that process. You know, obviously you've seen the shambles in the US around getting aid to people. It really just makes the case for, you know, if everyone had a wallet associated with their social security number, that process would have gone to seconds as opposed to weeks. And I think, you know, more and more we're going to start to see this propagate. We've already got 40 central banks across the world that are looking at this, that we're aware of. And I think this is just going to continue. So yeah, look, it's a very exciting future. It will continue to push forward the blockchain industry as a whole. And obviously we plan to be front and center of that industry.
Well, we're going to be keeping watch, and certainly we will speak again ahead of that public listing planned on the NASDAQ. But for now, Richard, Thank you so much for joining us. It was really great to learn just where this space has come from and where it's going, and the contributions that you're making right there in Hong Kong. So we appreciate it, of course. Things are really interesting here in Asia, that is for sure.
Absolutely.
Thanks, Richard. And thank you, everyone, for joining us on this latest episode of Word on the Block. I'm Editor-in-Chief of Forkast.News, Angie Lau. Until the next time. You know what I'm going to say here, right? Like, comment, subscribe. We hope you do. I'm Editor-in-Chief Angie Lau, Forkast News. Subscribe for a lot more in-depth conversations. This is what we do for you every day. And here's the next one.